There we go. Live on Facebook.
So since it's question based, I guess just more of a conversation between us and then looking at scan that every now and again instead of coming out.
Okay. It's on, but it's delayed. It's weird. Oh yeah, this still in. Let me turn the music on. Go. I'm gonna turn the volume down so that we can't hear ourselves. Okay, well, I guess we'll just get started. We are live, so we will just assume that everyone's out there.
Okay.
Hi, everyone. My name is Diane McGowan. I am Director of Operations for your home team with Keller Lindsay Realty. I'm here today with Jennifer Brammer, and she's one of the real estate agents on our team. I'm also here with Lindsay James. She'll be here with us from Veterans United. We're going to talk today about using your military benefit. As a military veteran and active duty military spouse myself, it's very near and dear to me, so it's important that we all understand what our benefit is. And Jennifer here is completing her military relocation professional certification. What does that mean, Jennifer?
It's just a certification that is available to real estate agents so they can be educated in the ins and outs of the moving for military service members. It trains us to hopefully help military service members have a less stressful move, make it easier, faster, so the transfer can just.
Yeah, that's so valuable. I mean, PCS in general is just a nightmare to finding a school. So to have someone that knows the ins and outs, that's a great asset.
Yes.
So one of the biggest questions I get in the military community is, why should I buy a house? I'm only going to be there 3 to 5 years.
So, and that is something that you should consider when looking at buying a home when you PCS. Look at the length of the tour and current interest rates. But there are just the same for non-military as military, there's benefits. There's tax deductions that you can have. You're building equity. On average, homes build about 3% equity each year. You have predictable mortgage payments. Your landlord can't come and say, hey, you know, your lease is running up to renew, we're raising your payment an extra $200 or whatever. So that's nice. So talking about the tax deductions, each month, part of your mortgage payment goes towards your interest. And at the end of each year, when you're doing your taxes, that interest that you paid in your mortgage payment is tax deductible. Another tax deduction is your property taxes. That's another part of your mortgage payment each month goes towards your property taxes. And so at the end of the year, that's another thing that you can possibly deduct. And so if you're itemizing your deductions, that can make it lower your tax burden significantly. And if you're using your BAH funds to go towards your mortgage payment, then that's like free money on top of free money. You're getting the tax break, you're getting your mortgage payment paid for. So I mean, nobody wants to leave free money on the table. The building equity part of it. So, you know, each month military members receive funds that they can use to go towards their mortgage payment. Here in Oklahoma City, those funds can range anywhere from like $1,200 to $2,000 a month, depending on your rank, if you have dependents or not. So if you're looking at, you know, a home that's $220,000, you have a VA loan, you know, your payment's going to be approximately $1,500 a month. And so if you're receiving the average $1,600 a month in the BAH funds, then your mortgage payment's free, you're building the equity, it's free on free on free is the way that I kind of look at it. Another thing like that I mentioned earlier is the predictable mortgage payments and having that sense of stability. I know with military families, you're always having to move and change locations, find schools like you were mentioning, daycare, sports, whatever. But if you can know that you own this home, it's yours, you can decorate it how you want, you can paint it, you can hang whatever you want without having to worry about what your landlord's going to say. It just provides you with a sense of like stability. You know, this is my home that I have, I'm in control of it. When sometimes you don't feel like you have a lot of control.
Especially
other
living on
aspects.
base.
Yes.
There's so many rules on what you can do and can't do.
And some base housing is great. Some base housing, you know, they don't come around and check things very often. It's when you move out, they go and do a check and see if anything needs to be repaired. But unless you call them, I mean, you could be living with things that are falling apart or whatever, and you don't have control over those repairs.
And if you're looking at like the top of your BAH, you could always look a little less, and then that way you can cover because the advantage of living on base is your utilities are paid. But
Right.
if you just look a little less, then you can cover that as well out of that BAH funds.
Yes.
So that would be an advantage to me, because that was always kind of my thing. Like, well, I'll have my mortgage covered, but then I'll have to come out of our salary for utilities. But I think especially here in Oklahoma City, I hope we have viewers from all around the country, but the BAH varies, so it's average to what is in their area. So you just get with one of the lenders and real estate professional and find out what is the average price in your area, what you can afford.
Right. Well, and I was comparing too, looking at, because getting to on-base housing, the wait months to a year.
Right.
So a lot of times, even if you are trying to get on base, you're having to do something in the meantime. And so when you're looking at renting, your utilities aren't combined with the rent payment.
That's true.
So you're paying more in a rent payment than you would on a mortgage, because your landlord's not going to want to be renting you for less than what they're paying on their end. And so you're paying more each month for your rent payment than you would a mortgage, and then your utilities. And so it just seems the best cost-wise to get the most bang for your buck.
Even if we leave and I want to sell it, that's still smart.
Yes, because like I mentioned earlier, you're looking at on average about 3% equity each year that you're building. And there are, I understand military service members, if you are looking at moving in 3 to 5 years, you probably aren't going to want to do major improvements to your home because you're not planning on living there for a long time.
Right.
But even there's a lot of small fixes that you can do that can dramatically increase the appeal of your home, which can increase the value and so on and so forth. So
awesome. Yeah, those are great reasons. All right, so we're going to now introduce Lindsay James from Veterans United, and she and Jennifer are going to have a discussion on how you actually use this benefit that we have, what it is, what all the different questions. So we're also going to be giving away some gift cards. Please click, I'm going to post the QR code so that you can register and give us some feedback. And then Veterans United has generously donated some gift cards that we're going to be giving away throughout the session as well as at the end. And please, I will be moderating from behind the camera. So if you have any questions that aren't covered for Jennifer and Lindsay, please let me know and I will shout out to them.
thank you, Diana.
Thank you, Jennifer.
Awesome. Hey guys, I'm Lindsay with Veterans United. Just wanted to say a little bit about myself. I think it's important to know who you're working with as a lender as well. So I actually came from our corporate office. I've been part of the Veterans United team for 6 years now. Feel super blessed to be part of the best team ever. But I came from our corporate office, moved down here to Yukon, Oklahoma, which is where my husband grew up. So I'm super excited to be able to say that Veterans United is local
Yes.
Since we are a big national lender, we actually are the nation's leading purchase lender for VA loans. But just being able to be here and do things like this and being able to meet clients is my favorite part. So anyway, so just so you know, we're here local as well, and I'm happy to answer any questions about the VA loan.
Perfect. Thanks, Lindsay.
Yeah.
Okay, so I thought maybe we should start with asking, what are some of the basic benefits of a VA loan?
Yes. So the basic benefits. So first off, the most important thing is there's no down payment. So you don't have to worry about bringing money to the table as far as down payment goes. FHA loan, the minimum is 3.5%. Conventional, the minimum, of course, depends on the lender, but 3%, 5%, somewhere along those lines. So no down payment is the number one benefit. Secondly, there's no private mortgage insurance. So that's going to save you money monthly compared to an FHA loan with 3.5%. You've got to pay private mortgage insurance, which actually stays on the loan for the life of the loan. Conventional loan depends on how much money you put down, but usually on a conventional loan, anything under 20%, you've got to pay private mortgage insurance.
Which can be a couple $100 a month.
Yeah, depending on your loan amount, can be very significant. So that's one of the awesome benefits of the VA loan. There's no PMI. And then thirdly, what I'll say is it is a lifetime benefit, so you can actually use it more than once. You can have 2 loans open at one time. I'll mention PCSing. So you can purchase a house at your first duty station, move to the next duty station, keep that same one, maybe rent it out to another service member or a non-service member, get a little rental income in that regard. But yeah, you can have 2 open at one time. Once you sell the first property, or if you just have one at that time, it opens up your entitlement to be able to purchase again and again and again. So you can have more than one. A lot of times, people come to me and say, well, I've already used my benefit. Can I use it again? And you can definitely use it more than once, which is really nice. And there's no limit on your age. And you could be 80 years old and use your VA benefit. So.
Perfect. Awesome. Okay, so how then, if I was a service member, how would I know if I was eligible to get a VA loan?
Right. So you have to have at least 90 active days of service after training. So once and that's during a wartime. There is a time period in the 90s that was considered a peacetime. You have to have at least 180 days of service in that scenario. But for the most part, 90 days active duty. If you are a guardsman or reservist, you need 6 credible years to qualify for the VA loan. If you are called up to active duty via Title 10 orders, then that automatically triggers your entitlement. So if you've only been in for a couple of years in the Guard or Reserves and are called to active duty Title 10 orders, that does trigger your entitlement as well. But in general, 90 active days of service after training and 6 years for Guard or Reservist.
Okay, and it can be used while I'm active, after I retire, everything in between, right?
Yes. So if you get out of the military, of course, you do still qualify as long as you've had an honorable discharge. Even general, kind of depends on the VA. They're the ones that make the ultimate determination regarding the eligibility. But yeah, if you're out of the military, you could be a veteran that served years ago, and as long as you've had an honorable discharge on your DD-214, 90 active days of service, then you do qualify.
Okay, awesome. Good. All right. So I know some people have heard of the VA funding fee. Can you tell us what that is?
Yes. So basically the VA funding fee is a one-time fee that the VA charges basically in order to keep the program alive or going. So we can actually finance it into the loan amount, so you don't have to pay for out of pocket, which is really nice. And if you do the numbers, depending on your loan amount, it really doesn't change your payment by much. You can pay for it out of pocket if you'd like to, but you're not required to. So that is one thing that the VA will allow for us to finance into the loan. It's 2.3% for first time use and 3.6% for any subsequent use. So that funding fee actually is waived if you do get 10% or more VA disability. So if you're a veteran and you get money from the VA for that disability pay, you are exempted from that funding fee. So I would argue even if you did have 20% down, for example, to do a conventional loan, that the VA route would still be a better bet, especially if you don't have to pay that funding fee. So that saves money too. But yeah, typically, so generally it's 2.3% first time use, 3.6% for subsequent use. That can be rolled into the loan.
And that's of the total loan amount, right? That's what they're.
Right, yeah, or of the purchase price. So
Okay.
if the home is 180,000, 2.3% of that. And we add that into the loan to make the total loan amount with that funding fee.
Okay.
So
Perfect. Okay, so then are there any max loan limits to use on the VA?
So there used to be a VA max county loan limit, so you could only borrow up to a certain amount depending on the county.
Okay.
There is no max loan limit anymore.
Nice.
So last year the VA kind of got rid of that, and they did increase the funding fee just a little bit because they eliminated the max loan amount. But I mean, you can purchase as long as you do qualify. In other respects, you can purchase, up to $1 million plus without having to put a down payment down.
That's awesome.
Used to be to where, anything over the county loan limit set by that particular county, if you purchased over that, you would have to pay 25% of the difference between the county loan limit and your purchase price. But now you can still get 100% financing on any loan amount, which is really nice.
That is nice.
So
Awesome. Okay, so another fee, closing costs. Can those be added into a VA loan?
no, so actually that's one of the most common questions that I get. The loan, of course, is 100% financing, but the VA won't allow for us to finance in your closing cost.
Okay.
So the title fees, the VA appraisal, taxes, insurance, all those things, unfortunately, cannot be financed into the closing costs. They can be written into the contract so that the seller could give you credit for those items.
Right.
That's really the best way to be able to say, hey, I didn't have to bring any money to the closing table. Right now, I know the market here in Oklahoma City, and I'm sure across the whole US is extremely competitive. I don't know if it's as easy to come by seller credits, but unfortunately, we can't finance those in. But like I said, we can finance in the VA funding fee. That's the one thing that we can't finance in.
Perfect. And we can, I mean, I know you just mentioned it is competitive, but there are sellers out there that are still willing to help cover those closing costs. So
Awesome.
it could be to where you are able to come.
Right.
Zero money to the closing table.
Yes.
Okay. So the upfront cost of home ownership, there are costs outside of closing costs and the VA funding fee that buyers are going to have to cover. And that's going to include like their inspection fees that happen, prior to purchasing the home. Are there any other costs on your side?
No, not really. Even the VA appraisal is $500 here in Oklahoma.
Okay.
It is non-refundable, but a lot of times I say, let's just worry about it at closing, so you're not having to pay for that up front. So really the two biggest things are going to be earnest money, which ranges from what, $500 to about $1,500 depending.
Yeah, it just kind of depends on really the price point you're looking at.
Okay,
yeah.
So earnest money, and then your home inspection, which the VA doesn't actually require a home inspection, but we always suggest you get one done, which I'm sure you would agree.
Yes.
Yeah, just because the home inspectors are going to be a little bit more thorough with regard to the condition of the property compared to the VA appraiser.
Right.
The appraisers will of course do comparative research. There are minimum property requirements for the VA loan, just to ensure that the home is structurally safe and sound and move-in ready. So the VA appraiser and say, hey, we need this doorway scraped and repainted if the paint's peeling, or if there's a stairway in the home, it's just one of the weird requirements, but there's a certain amount, there's a certain amount of space in between the spindles, has to be like 4 inches or less, little things like that they look out for. But the home inspector is going to be much more detailed and thorough. The appraisers don't get on the roof, they don't go in the crawl space or anything like that. So we always suggest you get one done, but we don't require that. And what does that range as far as the price on a home inspection?
Between about $200 and $400.
Okay. Yeah, so those are kind of the main things, is the earnest money and then the inspection. We can take care of the appraisal after, or at closing rather. So.
Okay. Do you require termite inspection though?
Yes, the state of Oklahoma does require a termite inspection. Good call, I forgot to mention that. So it does have to be free and clear of all wood destroying organisms. Of course, termites, any moisture damage, carpenter bees and ants and things like that. So if the termite inspection does show any of those items, we just have to be sure that those items are remedied prior to closing.
Okay, Are there any special programs that service members could qualify for if they cannot get the sellers to cover closing costs to help in that aspect?
Right. So, yeah, so that is one thing that is great to talk about, because just given the nature of the market, hopefully the seller's willing to pay for closing costs. And I know it's not totally unheard of right now. It's usually pretty common. But if not, if it's a multiple offer situation and they want your offer to stand out and maybe don't ask for closing costs, then we have the option to utilize the bond program here in the state, which is the Oklahoma Housing Finance Agency, or OHFA. We are a preferred lender through OHFA. So what I didn't know when I first moved here a couple of years ago is it's technically kind of a down payment assistance program. They will give up to 3.5% of the purchase price. We can actually use that 3.5% for closing costs on a VA loan. So it's not only for the down payment, we can use it for the VA loan, which is usually enough to cover almost everything, depending on the purchase price. Maybe not all in some scenarios, but at least it's a very good portion of what closing costs are.
Yeah.
So we are a preferred lender. I technically do all the legwork as far as paperwork with OHFA. So if a client lets me know, hey, I'm interested in this, we can go over the ins and outs of the program. And then basically I would reserve the loan through OHFA, work on the paperwork, and then really that money doesn't come until closing. So it's not something that you would get prior to that inspections, unfortunately.
Yeah.
But you just have to sign a couple of extra documents at closing, and you don't have to pay it back. It's not a loan, it's a bond program. So that's really nice.
That is really nice.
Yeah, that's the only program that we participate in, but we are utilizing it quite a bit lately, just so that our veterans and service members can keep in their pockets when they buy their home.
Yes.
So
awesome. Okay. So as a service member, where should I start? Would you recommend I speak to you first, a real estate agent? What's kind of your opinion?
I would say in general, it's always a good idea to talk with your lender first, get an idea of what you qualify for. It's really quick and easy these days. Honestly, you can go online and get a pre-approval letter, within 20 minutes or so. But yeah, I mean, call me, we can go over the numbers, we can take a look at what an estimated payment would look like. You might qualify for a certain amount, but you may say, hey, this is where our budget is. So it's always good to kind of have that idea before you go out and start actively searching for homes, so that you have an idea, like I said, of the payment, you feel comfortable with that. And most sellers are going to want a pre-approval letter, with your offer anyway. So why not take a look at that first? You can certainly call an agent first and have that person in your corner too. But I definitely would suggest having a pre-approval letter before you actively start going out to the homes and asking your agent to set up a search for you.
Right. So that's what I typically recommend when people contact me. Ask, have you talked to a lender? Because with the market being as it is, sometimes we have minutes. We go look at a house and they want all their offers in by 7 o'clock, and so we need that pre-approval. And so it's really nice to have that already in hand, so you're ready to go.
Absolutely.
The minute you find the house that you love. And you don't have the paperwork in the way. As quick as it is, it's just another step that you have to do.
Yes.
So that's what I usually recommend as well.
Absolutely. And especially if maybe there's some work to be done on the credit. There are minimum credit score requirements. We have a free credit consulting division of our company that you don't have to pay for anything, but if a service member or veteran comes to us and they don't quite have qualifying credit scores, we have, my teammate is Kevin. So Kevin will basically run his simulator, let us know what we need to do, and work with the client until they have the scores where they need to be. So we have awesome success with that program. Any number of things. Credit's kind of a weird thing. Any number of things can show up on there, and sometimes there are things that from the past that you may not even know about, honestly. So just even if you think you may have marginal credit scores, just call me and we'll run it and take a look at it. We can always have Kevin dig into it a little bit and kind of give us a plan for increasing our scores, whether it's open a secured credit card, charge a tank of gas on it, pay it down to $5 to help establish scores. Or maybe you have like an old collection that needs to deleted or something. Maybe you hate it, but they just have to delete it or
Mhm.
something, you know, so anyway, so yeah, we've got that free credit consulting too. But that's just another reason why you should start with the lender first, just in case there are any things that we need to
Any
maybe work
hiccups,
on
yeah.
together. So before you go under contract on a home.
Right.
So
Well, I was gonna say too, that may scare some people thinking, well, I don't know, like, what am I gonna have to do to fix my credit? But like you're mentioning, sometimes it's really small things that you can do that
Right.
can make a big impact on your credit score and
absolutely.
help you out. Speaking of which, what is the minimum credit score for VA?
640 right now. Typically it's 620. Last year, a lot of lenders kind of increased that because it's really based on the lender, not necessarily the VA. So right now ours is 640. Last year, like I mentioned, some lenders did increase. I heard of even 680 on a couple. But we have since, we did increase ours to 660 for a little bit. We've dropped it back down to 640. And then hopefully by the end of the year, we're back to 620 where we were. So in that we pull a tri-merged mortgage verification. We look at all three credit bureaus and we take the middle score of the three.
Okay, awesome. Okay, so then how would I get pre-approved to use my VA home loan benefit?
Yeah, so like I mentioned before, it's really easy now just to go online. What I would suggest doing is, especially, you know, for those VA loans, going